Just sell, Peter.
Shut the f*** up, Tiffany! My altcoins are gonna moon! You don't know shit about blockchain! Model gang for life! Ripple's gonna put Junior through college and I'm gonna have 3 Lambos, bitch!
Hey guys, what's up? It's Dusty here, back with another crypto video. And today, we're gonna be talking about why I am buying Ripple's XRP. Now, timing the market is never easy, and I can tell you guys for certain that I as well have been one of these persons. I've been a person who was held for too long. I definitely have been in this spot a couple of times, but I've also been a person who didn't really expect a bull run, and it just all shot out of proportion. Next to that, I've also tried to chase the bull for a very long time, but it doesn't all work out. So today, with the help of a little bit of a cool book, I'm going to be talking to you guys about why I think these periods, like right now, whilst we're at 26 cents, are very good periods to be buying Ripple's XRP in this very bearish market. I think it is pretty interesting, the type of theory that we have for you guys today, and I definitely think you will enjoy this video. So make sure you go ahead and press the like button right now if you think it's going to be fun or if you like the subject. Now, before we get into any real cool stuff, I do want to mention that we are giving away $200 worth of XRP if this video can get 500 likes within 24 hours. All that you have to do to enter this giveaway is press the like button on this video, go ahead and comment something down below, and make sure you have the notification bell on. And then if we hit 500 likes within 24 hours, we are giving that away in a video tomorrow. Now let's get into the video. No, but fun story, guys. This is how I wake up every single day. And of course, I'm talking about the lift music as well. I always listen to that in the morning. But next to that, every morning I have a conversation with one of my buddies surrounding some crypto, and this is mostly what it looks like.
I'm buying the dip. You shouldn't buy a dip in a bear market. You should short it until bottom and then buy the bottom. No one knows when we're at a bottom. Better to get a reasonable discount hodl and ensure that I'm hodling during the largest growth days of the year. It's not a discount if it's gonna be half the price you bought next week. It absolutely is a discount if it's gonna be 100x the price I bought in 5 years.
And I'm not even joking, guys. This conversation I've had hundreds of times before. And since you're still watching this video all the way up to this point, make sure you go ahead and press the like button right now. So guys, as I told you before, I've been reading a lot of books. And in this case, I'm still talking about one of the books that we kind of went over in one of my videos a couple of days ago. This book is called The Intelligent Investor by Benjamin Graham. And if we scroll down a little bit to about page 17, I do believe, if I'm not mistaken, it says right here why this bearish market is so good. So first off, in page 17 or 15, it says, while enthusiasm may be necessary for great accomplishments elsewhere, on Wall Street it is almost invariably leading to disaster. That's one thing you should keep in the back of your head. Added to that, obvious prospects for physical growth in business do not translate into obvious profits for investors. Now, I already went over these quotes with you guys previously, and what I meant as an example for the second quote here is with Bakkt. Now, in the case of Bakkt, many people already expected gains to be following once Bakkt hit, and now that it really did occur and came in, quote-unquote, physical growth happened, the price did not shoot up anymore. A lot of people are confused as to what happened, like, was Bakkt not good? Was it a failure? What? No, it was not a failure, but since everybody in this industry expected the price to go up because of it, everybody has already bought in anticipation of said event, and in the end, that made the price not go up as much. In the words of Benjamin Graham, I believe that he wrote this part already, could be one of the other major investors in the space of, traditional investing that wrote these kind of pre-words. While it seems easy to foresee which industry will grow the fastest, that foresight has no real value if most other investors are already expecting the same thing. By the time everyone decides that a given industry is obviously the best one to invest in, the price of the stock have been bid up so high that in future returns have nowhere but to go down. For now at least, no one has the gall to try claiming that technology will still be the world's greatest growth industry, but make sure you remember this. The people who now claim that the next sure thing will be healthcare or energy or real estate or gold are no more likely to be right in the end than the hypesters of high tech turn out to be. And this is the case where some people are claiming this coin or that coin is going to be the next thing. It all just depends on kind of the idea that not all people know the same information and that you yourself made the right choice. It could be anything though, right? It could be Bitcoin. It could be a coin that's on number 2000. Who knows? But now we've not come here to discuss about which coin is going to grow the fastest, since nobody really knows for sure, and we've also not come here to talk about backed. No, what we came here to show and to talk about is why I think these coins, for example, now that XRP is down 8%, are a lot more safer for you to buy XRP at than if it's going up with 10%. A lot of people will tell you follow the trend. A lot of people will tell you if the prices go up a little bit, you know that we're in a good market, you know that gains are more to follow. But I'm actually of quite the contrary opinion unless there is a very, very solid downtrend. In the case of a very solid downtrend, you might actually anticipate some bigger losses coming in the next couple of hours, next couple of days. You might be doing a little bit of a different strategy, but I still am quite convinced that I can also convince you to think the way that I'm thinking. Damn son, you're still watching this video. Why don't you go ahead and press the subscribe button whilst you're liking this video? I bet you can't do both of those things at the same time. If no price seemed too high for stocks in the 1990s, in 2003 we've reached a point at which no price appears to be low enough. The pendulum has swung, as Graham knew it always does, from irrational exuberance to unjustifiable pessimism. In 2002, investors yanked $27 billion out of stocks mutual funds, and a survey conducted by the Securities Industry Association found that 1 out of 10 investors had to cut back on stocks by at least 25%. The same people who were eager to buy stocks in the late 1990s when they were going up in price and therefore becoming expensive sold those stocks as they went down in price, and by definition, those stocks became cheaper. So again, to kind of conclude what they just said here, the same people who were eager to buy stocks in the late 1990s when they were going up in price. So again, we can kind of compare that to people who bought in the bull run of the 2017. The same people who bought in the big good time of 2017 when they were all going up in price and therefore becoming more expensive, sold those stocks, in this case, sold their XRP, sold their Bitcoin as they went down, again, at one of the random miscellaneous prices right now. And by definition, those coins became cheaper. That's exactly the opposite of what you should be doing, of course. I just saw one of the tweets come by on Twitter as well. I don't even know who it is from. That was also saying the same thing, like how funny it is that people bought at 19K and then are selling now at 7. It's really quite interesting. As Graham shows so brilliantly in Chapter 8, this is exactly backwards. The intelligent investor realizes that stocks become more risky, not less, as their prices rise, and less risky, not more, as their prices fall. The intelligent investor dreads a bull market since it makes stocks more costly to buy, and conversely, so long as you keep enough cash in one hand to meet your spending needs, you should welcome a bear market since it puts stocks back on sale. So take heart, the death of bull market is not the bad news everyone believes it to be. Thanks to the decline in stock prices, now is a considerably safer and saner time to be building wealth. And yes, that is pretty much what I have to say. Of course, there are a couple of limitations in the case of if you're almost retired and you should be saving up in a very safe manner. That could be the case. But for us youngins in the crypto space, it is definitely a good idea to be stacking up on all of this XRP right now. Hold up though, I could understand if you're sitting back into your chair just thinking about what the frick I just said and what I'm trying to say, because all you're trying to figure out is why I am buying and what I'm thinking about that. But hold up, I have a good explanation for you. The whole idea of the story that I just gave you guys is to kind of get an intuitive feeling of why a bear market is not bad and why I actually always enjoy it when the prices are low. But if you did not get the whole story about the book and about the funny clips I tried to show you guys, what it really comes down to is that whenever the price is lower or whenever the coin has fallen more, it actually becomes a safer bet to get into. And I know that might be very strange for you to believe, but that's kind of the feeling that I'm trying to put inside your head here to kind of get an intuitive feeling of why these lower prices are safer / better. But there is a little bit of a twist, and one thing you should always keep in mind if you're kind of applying this strategy, and that is that you should always have the greater goal in mind, and that you should really believe in your asset that you're going to be holding or that you're buying at these lower prices. In the case of the book, the example they give are for traditional stock markets, and what the good part about this is that really on a longer term basis, you can't really go wrong. Now with XRP and with some other coins that you might be applying this for, you can definitely go wrong, because it could be that something really huge happens and XRP goes down a lot of spots and never recovers. So if you're seeing XRP go down by 80% every single day, there's a chance that, you just made the wrong choice and you're never going to see your money back again. So lower prices were not really safer, but actually kind of stupid and kind of bad. In the end, if you think about it, it was still safer to buy at lower prices than at higher prices, because, if you bought at a high price and it goes up, you still have less profit than if you bought at a low price and it goes to the same point. But it's just about the idea there. If you are convinced that a coin is going to go up somewhere in the future, the lower you can buy it at, the safer it is. And in this case, I'm using a layering strategy that I've applied or told you guys about multiple times throughout these years that I've been doing this for. I'm just trying to point a couple of points out for myself where I think it's going to have to struggle a little bit, the price, but also where a lot of people are going to be buying in. And I just try to put my buy orders a little bit above, a little bit below, a little bit, around that area of where some popular targets are. And you just kind of got to get a feeling for that as well. In a case of XRP, I guess you can buy at around points like, let's say, just a little bit below 25 or just a little bit above 25 cents, or just maybe like a couple of sats below, because in the sense of it hit 25 cents, if it goes below there, we know either support is broken or it just tried to get below there but it couldn't. In the case of below 25 cents, you can just put it there because it might be just one spike below there and then back upwards. Could also be that it's going to fall down lower from there. Then you got the lowest entry possibly. It just all depends on what your strategy is. You can always go a little bit above a solid mental point. For example, 25 cents, 20 cents, 15. Those points. You could look at some Fibonacci retracement levels to pick yourself a good entry. Maybe just put your buy orders just above those as well. And it just depends a little bit on how much risk you want to take, how much you believe in the coin's future, and how much you want to have. Because if you only want $10 worth of XRP, you're gonna have to do this whole strategy with just 10 cents each time possibly, or maybe like 50 cents, and it's gonna be a very long and drawn out process. And it could also be that you've already gotten all the money that you want to put into crypto. Well, again, that's then a different case. For me personally, I'm always stacking up more crypto whenever I can, because it's just a traditional investment for me, but in this case in a little bit of a more risky, more reward type of fund or asset, and that is why I choose it. Now, if crypto does very bad over a long period of time, we made the wrong bet, but I'm personally convinced that it's going to be doing really well over all this time. So whenever it goes down by these large margins, I'm quite happy because we just got another opportunity to buy more. And again, if you're wondering why some of the news is not taking these prices up, now you know, because we explained in the Intelligent Investors example why it's most of the time the case that the anticipation of an event is gonna do more for the price than the event itself. And it was also seen with swell of last year with the anticipation of XRapid being launched the 1st of October. Of course, the couple of weeks before when it got announced, everybody was really happy, buying in. And then when the deed really got in, so what are they quoting it as again? The physical growth really occurred. The price did not went up anymore. It couldn't really go anywhere, right? It's all following the same principle. Others like to call it buy the rumors, sell the news. It's the same intuitive feeling. It's the same idea behind it all. But you just got to put it up for yourself and never go away or astray from that thought. And if you have that in the back of your head, you will always understand why these lower prices are most of the time better for you in the end. Now guys, that was it for this video. Hopefully you guys now have a little bit of an idea of why I like Ripple XRP so much, why I got into it just a little bit more just now. Again, to basically put it out for you guys, we just got down quite a lot lower. It's a good buying opportunity for me once more. And since I'm doing a layering strategy, I just buy at multiple places, but right now was a very good entry for me. It could be that the prices go lower even after this, but hey, timing the bottom is almost impossible, and since I have layering strategies in place, doesn't really matter at which points I buy. Thank you guys all for watching this video. Make sure you go ahead and press the like button right now, and I'll see you guys again in another crypto video very, very soon. How did you guys like this style of the more funny approach to everything with more GIFs, more memes, more everything? Let me know, because it's been a lot of work to create this in comparison to what I normally do, but hey, leave me your feedback. Make sure you join the Discord. A link for that is in the description below, and make sure you go ahead and check out the Facebook group. I'll see you guys again in another crypto video. Take care, everybody.